Welcome everyone to another edition Market Hunter Thursday with Hervé. We're so excited today. Our show is taking us all the way to the other side of the coast, the left coast, Seattle, Washington. So let's go, as you know, get some stats, some market stats specifically about the city of Seattle, Washington. Population 776,000, median income of 92,000, median rent of $1,600, and median home value of 130,000 or just less than that. Amazon, Starbucks, Microsoft, Nordstrom, Costco, if not directly in Seattle, then on the outskirts. So a lot of activity going on in the city of Seattle, Washington. I'm so excited to have today our guest, Mr. Preston Walls from Walls Property Management. So without further ado, fellas, let's go ahead and get started. Hey, Preston, welcome to the show, my man.
Hey, thanks for having me. Excited to be here.
But what's so excited about investing in Seattle, and what specifically kind of real estate investing do you and your team, I guess, do in Seattle?
I grew up in Seattle, was born and raised there, and went to school on the East Coast and moved away. I thought I was gonna be on Wall Street for the rest of my career, and just ended up getting burned out.
You and I both, by the way. We're there, but something happened to us. It was like, it's not going to be for the rest of our careers.
Yeah, no, but I grew up with real estate. My father was a real estate developer in Seattle, and so I had various businesses during high school and through college. I painted houses, I painted commercial properties. So I was, I saw the business through that lens. It was what I knew, it was what I was familiar with, and what I'd grown up with, and so it was a logical transition for me from Manhattan to head back to Seattle. It's very very similar to your New Jersey market. It's capital appreciation market. Cash flow is limited, so you've got to find a way to make properties work out that are not cash flow based, and so the kind of niche that I've identified are these kind of significant value add properties that at the end of the day you can extract your equity out of it, not by selling but through refinance. So do the renovation, get the value up, and refi it to take your capital out and redeploy it in the next project.
Got it. Makes sense. And folks, if anyone has questions for Preston, please go ahead and put it in the comments box, and we'll make sure to get it out. And if you're watching on YouTube, please smash that subscriber button at the bottom of the screen. Preston, when we talk about different real estate strategies, we have viewers on this show that are just beginning a flipping strategy, or they're veteran flippers themselves. And then, of course, we have both that do just buy and hold rentals, right? Whether it's single family rentals, definitely a lot of small multifamilies, duplex, triplexes. What have you found that Seattle attracts from that perspective? And do you see any seeds of change taking place based off of a lot of the activity that's been going on in Seattle?
My first property was a house hack. And it was a triplex that I turned into a four unit building. I lived in one of the units, and that's a great way to get yourself a low cost place to live in an expensive market,
right? And
get into an asset that you can grow and leverage. And I still own that property, the first one I bought, and it's cash flowing well for me now.
Is there been a lot of opportunities for house hacking now, or have prices? I mean, one thing is prices seem to have definitely picked up, not only across the country but specifically in your neck of the woods over there in Seattle.
There's always going to be challenges to getting into a market, right? There's always hurdles. It's always going to be hard. Just specifically due to COVID, it has created a lot more opportunities in urban areas, in dense, expensive areas like Seattle, because there's been this exodus from urban areas, right? People want more space. So I think this is a good opportunity, a good time in the cycle to to invest if you want to be in an urban area. It's been a good time to get in, and good opportunity. And the other thing, house hacking, it favors the entrepreneurial, scrappy, right? You've really got to figure
Yep.
out a unique way to make something work. It's not very scalable.
No.
you can only live one place.
Yeah,
But
exactly.
it is a great way to get started, get your foot in, and build some equity.
Yeah. It's interesting that you say about that in regards to a lot of activity taking place in the urban area. I mean, there's been this urban flight that had been taking place even before the pandemic. It has accelerated due to the pandemic. I don't know if this is a cyclical shift or if it is a secular shift. I like to believe that some folks that have left that are going to come and move back, especially if we see prices drop in those urban areas. There's only so much the suburbs can take. And I think, trust me, as a person who used to do that commute into New York City every day, you're going to get tired of it. I promise you.
There's a lot more competition.
Mhm.
The fewer the units there are in the building. So right, a duplex will
Right.
have a lot more competition because you have competition from the single family buyer market, which is really, really hot. The multifamily buyer market is a lot less hot because in Seattle rents are down significantly from their pre-pandemic level as people have moved out of the city. I expect that to return as people come back to the office and jobs return.
Listen, I mean, talking about vacancy, right? I mean, that goes square to, what you do, being a property manager. What can you tell us from the perspective, what kind of concessions that property managers have been putting out there in order to go ahead and fill some of these vacant units that might be in some of those areas where you said flight has taken place? What has been happening to rents as well? I mean, if they have been softening up, is it falling off a cliff, or is it kind of death by a thousand cuts kind of a thing? Where you see it on your side?
I would say it fell off a cliff in about September of last year.
So where are we with rents right now, would you say, for one bedroom decent area in Seattle?
Well, just overall across our portfolio, all property types and unit sizes and types.
Mhm.
I would say turnover rents are off mid to high teen%. So
Wow.
16 to 18% price decrease. So if that unit comes available today,
Right.
and that doesn't mean that the lease price dropped that amount. So that includes you can get there by adding in some concessions to make up that amount, and it depends. Smaller spaces, studios, especially small studios,
Mhm.
a lot less desirable
Right.
than larger spaces, and that's counter to the trend that's been happening for a long time. People have been gravitating towards smaller and smaller spaces because it's more and more affordable. It's not uncommon in Seattle to see 2 to 3 months of free rent on
Okay.
say a 12 to 16 month lease for well located Class A properties.
When we talk about the outskirts of Seattle, where you can still get into the city downtown within 30 or 40 minutes, where have you been seeing a lot of real estate investing taking place? And has that been, are those properties a little bit more cash flow centric than, let's say, what you see in the downtown urban area, specifically of Seattle?
Yes, absolutely. Just from our survey data of outgoing residents, they are by and large, they're staying in state, and they might be leaving Seattle proper, but they're going to like the first ring. They're not going too far to still commute, but during this time when there's a lot less emphasis on commuting. People are prioritizing having additional space, having additional green space, access to parks and trails over urban amenities.
Can you give us the name of some of those towns, some of those secondary and tertiary towns where, hey, they might even be benefiting off of the economic strength that Seattle proper, has always benefited from?
Yeah, Shoreline is one to the north of Seattle, Kent and Auburn to the south, the corridor along I-5 between Tacoma and Seattle has been popular as well.
Have you been seeing more development taking place in these areas as well, as folks have been moving out and the real estate investment has been moving out to some of these secondary areas? Have you been seeing more developers kind of putting shovels in the ground to try to really match some of that demand?
That one's harder to observe because the entitlement cycle is so long. It's about a 3-year process to get a building permit from when you say
Wow.
go. Not enough time has gone by to see if this will cause a shift. The larger developers are still full steam ahead on projects in Seattle, on continuing to entitle projects. There have been some smaller projects that are all studios, so an entire building of smaller units that have paused construction. I've seen a lot more permits on the market for building sites like that, just because that product is out of favor right now.
What other assets have you been seeing that's been gaining more attention? Real estate opportunities, whether we're talking about industrial, office, mixed use, storage, mobile homes. Do you have your finger on the pulse of any of those areas that have been appearing a little bit more attractive for real estate investors as well, based off of a lot of what's going on in the economy of Seattle?
Seattle is very Amazon centric.
Sure.
Focused, and
Seems like the whole damn world is very Amazon. Okay, how about that? Anytime you pop up, Amazon's putting up another distribution center someplace.
Yeah. Well, the housing,
Yes.
demand for housing has been driven. If there's been one factor, it's jobs, corporate office jobs created by Amazon. That has just fueled the boom in housing prices and rents over the past 7 or 8 years, and during this cycle. But the industrial component, there's really interesting things happening around smaller distributions, around cold storage distributions, grocery delivery. A lot more demand for distribution spaces as this Amazon model takes hold and has been accelerated by the pandemic.
Got it. Let's give you the opportunity to give us a plug on Walls Property Management. What specifically areas does Walls Property Management cover? What areas do you guys manage properties? What are some of your goals for 2021?
We operate in Seattle exclusively, so Seattle's our
Okay.
only market, and we're kind of niche because getting into an expensive market, capital doesn't buy you as many units. So,
Right. Yeah. So true.
So, my portfolio is a lot of smaller unit buildings. That's become the focus of property management, and what we've gone out to the third party market for property management. And you have to manage a smaller building differently than you do a big building with a leasing office and on-site staff. So keeping things close together is a way of keeping our costs down and reducing just travel time for maintenance staff and leasing staff to get out to kind of a geographically broad array of buildings, but geographically broad for me means 20 to 30-minute drive from our property management office in Seattle. And that guides my investment decisions as well. So,
Got it.
Seattle is a pretty big place geographically, and I only focus on probably less than half, maybe less than a third of the city as my target area for investments.
And Preston, how many doors does your team manage right now?
A little over 900.
Okay. All right. Has there been consolidation in this space? So, property managers can take advantage of the scale. And like you said, having leasing managers perhaps oversee, several buildings rather just one, just to kind of absorb the costs and things like that.
I would call it more just turnover and market evolution rather than consolidation, right? Some of the life cycle of building ownership is you manage your properties yourself, and you get to a point where you're tired of
everything. Hey, listen, Preston, we're nearing the end here, man. One of the things that we always do for our guest speakers, we like to hook them up, thank them for joining the show. So, to our viewers here on our channel, Facebook, as well as YouTube, how can we help you out and what you do at Walls Property Management in order to achieve the goals that you guys are looking to get through this year?
Thank you for having me on the show and
absolutely
able to talk Seattle. My contact info is Preston at wallspropertymanagement.com, and our investor side is wallspropertygroupre.com, and we've got to sign up for our investor newsletter there, and be happy to keep you in touch on projects that we're seeing in Seattle.
All right, man. Sounds good. Sounds good. Hey, folks, seems like some nice opportunities over there in Seattle, and Preston and Walls Property Management could be your man once you do lock down one of those nice buys and holds. 900 units under management right now tells me that this person, they know what they're doing. They have, contacts in the city and so on and so forth. So, and a lot of intelligence in regards to market information, where to be, where not to be, what could be a good investment property or not. So you have Preston's contact information there. Please use it as a part of your research if you're looking to go into Seattle. Preston, I can't thank you enough, my man. I appreciate you being here.
Hey, you bet. Thanks for putting this on. Great job with it. Enjoy being here.
All right. Sounds good, man. Listen, take care and be well. Bye-bye.